This has to be in you. Something in you has to wake up, dude. The only person that can wake it up is you. If you don't have just a little flame sparked under you, then you're done. You are done, and no one can light that little flame for you. It has to be you. And you have to truly identify what do you want out of life? And you must adopt the mentality where it's like, what if you lose over and over and over again and nobody believes in you, bro? And every day you look at your dream going at it every day again and again and again and saying, it is not over until I win. It's you versus you, bro. Ladies and gentlemen, it is you versus you. Do not quit. Do not give up. Keep going. Every failure is an opportunity to learn and get better. So fail and fail and fail, correct and adapt to then succeed. Just a little motivation for you. Now, how do you identify your daily bias and how do you find an entry, right? Disclaimer, this is not financial advice or trading advice. I am not an advisor. I am simply some hotshot on YouTube telling you my studies. So, first, you want to start with your monthly external range to internal range liquidity, right? Let's just go ahead and pull up our charts right here. Let's bring up like a random chart. Let's go to like euro dollar, for example, right? Not very, very random, but let's just bring up euro dollar, okay? So, as we bring up euro dollar here, and I'm going to pull out my notes so that way we can go ahead and read off of them. So our goal to find our daily bias, we begin with the monthly internal range liquidity, external range liquidity. What is internal range liquidity? Internal range liquidity is fair value gaps within the expansion leg or order blocks, right? So price does an expansion and retracement kind of thing. So internal range liquidity, whenever price is like moving up and expanding, this is an expansion leg and then it'll retrace. This is the expansion leg and it retraces into internal range liquidity because it's internal within this range, and then it expands towards external range liquidity. External range liquidity are these swing highs and swing lows, right? So with that kind of idea in mind, we're going to go ahead and just pull this up right here. Let's delete everything, jump to the monthly. Like I mentioned, we're going to go monthly external range to internal range liquidity, right? So if we're just looking at current price and what it has done, where it has moved from, you can kind of see here. And of course, we're doing this in hindsight, just so that way we can, just be smooth with it. Um, right here, you can see that price ran out external range liquidity. And from that point, attacked this internal range liquidity, down close candles, and then these other swing lows here. And then it retapped into this internal range liquidity within this leg right here, right? So it attacked internal range liquidity, and now the expansion is heading up into internal, internal to external, right? So we really just want to identify these areas of interest because these are areas of interest. And once we have these points identified, that's where we drop to our lower time frame, which is going to be the daily time frame here. And we're going to look for some like market structure shift reversal so that way we can kind of confirm that the higher time frame is starting to flip, right? So like for example right here, if we look at right here and then we look at these areas, I'm gonna drop to a daily time frame because whenever we run out monthly external range or internal range liquidity, we drop to a daily time frame to then look for the market structure shift to the opposite direction. So just kind of looking at this example right here, so we ran out this external range liquidity. As soon as it gets ran out with this candle right here, I am going to look left of that candle and I'm going to identify my 3 candle wick swing lows. If you do not know what those are, check out the last video that I uploaded. I kind of explain what they are for you, but to kind of keep it short, sweet, and simple, they are these wicks that have a wick that's higher to the left and higher to the right, making it a 3 candle wick swing low right there, right? So from this point, I'm going to look left. Where's my most recent one? We have this one right here, right? And whenever a new one gets created, that's the one that I go off of. So we have this one right here. And then from that point, price closed below it, right? And we want to look for a closure below it with some displacement. Displacement creates these fair value gap areas, right? Where it creates that gap right there. Okay. So we want to look for that displacement, but here's the catch. We don't just look for it to close on the daily time frame. We also need it to close on the weekly time frame, right? The weekly time frame is going to confirm that market structure shift bearish because the next week candle is going to open and it's going to retrace and go high into these fair value gap areas right here. And that's going to be the weekly high to expand low. So if you're familiar with the power of three or the AMD, which is accumulation, manipulation, distribution, accumulation begins at the opening of a candle where it'll just kind of go back and forth and accumulate liquidity above and below it. Manipulation is where it'll manipulate and take out some upside buy side liquidity before then distributing down into sell side liquidity, right? So that's where it accumulates liquidity on both sides of the range to then manipulate both sides. Okay, we get in on that manipulation because that's the high of the candle, and we look for opportunity to sell it lower, right? So you can see right here, the weekly candle closed on Friday right here. So this is where the new weekly candle open happens right here. So this was a valid market structure shift bearish. Okay, so what did it open and retrace into? It retraced into daily internal range liquidity here and internal range liquidity here. Now, from this moment, right, we can then look for dropping from a daily to a 1 hour and look for that market structure shift bearish with the confirmation of a 4 hour candle. And let's just go and do that real quick to kind of show you what that'll look like. So as soon as it taps into this one, right? As soon as it taps into this one with this big green candle, I'm going to look left, identify those 3 candlewick swing lows. So we have this one right here. If we look at the L right here, the price of it was 107.98. The one to the left of it, 107.98. So if they're equal price, the one to the left of it, then I consider that a 3 candlewick swing low. So this is my valid 3 candlewick swing low right here that I would want to see market structure close below. But we want to continue and look for the most current one. So this one gets created here. And then this one gets created here. Boom, closure below. But wait, we don't want just a 1 hour closure below. We also need some displacement and we need the 4 hour candle to close, right? Now the 4 hour candles close if you got your time set to the Eastern Standard Time, New York, which you should. The 4 hour candles close at, so they open at 1:59 a.m. EST and then 13:17:21 p.m. EST. Okay. So this one right here, you can see that this one opened 9 a.m., went higher, went down, went right here. This 4 hour candle closed right here. So it did not close. This was not a valid market structure shift bearish. See, a lot of people would have probably sold right here and got wrecked because they did not wait for that 4 hour candle to close. You have to wait for that middle time frame candle to close. So like we went from the monthly to daily, the daily market structure shift has to get confirmed by a weekly. Now we went from a daily to a 1 hour. This 1 hour market structure shift has to get confirmed by a 4 hour. Okay. So right here, no confirmed. Then we have this low, and then we just keep looking for the 3 candlewick swing lows that get created. We have this one right here, and then we have this one right here, and then we have this one right here. Boom, right? And then from here, you have this closure below, but we got to wait for a 4 hour candle to close, right? Which is going to be right here. So the 4 hour candle closed up here, which is not a valid market structure shift. So then we look again, where is the most recent 3 candlewick swing low? It is still this low right here. And then boom, this candle closes below. And We got to wait. So this candle, once this red candle closes below and market structure shifts bearish, because again, our valid market structure shifting point is this low right here. Once it closes below, then we got to wait for a 4-hour candle to close to confirm that that is a valid market structure shift, right? So we look, boom, 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 right here. So right here is where that 4-hour candle closes. So this was a confirmed market structure shift bearish. Now this next 4-hour candle opens, and the open, it goes high. This is the power of 3. So open is the accumulation on the lower time frames, and then it goes high. What does it go high up into? Well, right now it's, if you look over here, right, we have areas where we have this up close candle, whatever. It's pretty messy. We have no fair value gaps. We have really nothing here. That kind of tells us, you know what I mean, a PDA. So in this situation, whenever it's kind of messy and you don't see no PDAs and it's not clear, just drop one time frame lower. So from a 1 hour, I'd go to a 30-minute personally, and I'm gonna look within that leg area and see if there's some opportunity there, like a PDA area, right? So right here, for example, this is the 4-hour open. The 4-hour opens, and it opens up and it goes into these up close candles up here. You can see that there's this one right here. Huge up close candle. This is a huge 30-minute bearish order block right here, right? See, you don't even have to use that one because this wick is so far and so long. I would just probably stick to this one. You got to be fluid with it and adapt. It can be, what's the word for it? Objective or subjective? I can't remember the term for it. It's one or the other, but at the same time, it's your own intuition again. So like trading over and over and over and over again, like over time you build this intuition to how these markets truly move, to how price, you know, goes up and down and what it ends up doing. If you just look at price for so long, you look at how live price moves, you backtest, see what price did in the past, and you build this intuition where it becomes second nature, kind of like riding a bike or driving a car. You do it over and over and over again, that you become better at it over and over and over again, right? And so like in this situation, so we have where price goes up, we can enter on that kind of opportunity here, and stop losses can be above this 1 hour order block right here. Pretty big stop loss, I know. Another thing that you can do is whenever it taps into that order block, you can look for an IFVG, right? An IFVG is going to be an inverted fair value gap. So like right here where it's expanding up, it creates this IFVG right here, which is a fair value gap in this current price moment, right? And when our price taps into it, it can go up. But what we want to see is, if price is bearish, we want to see this bullish PDA get disrespected and close below. That's going to give us idea that bearish prices are starting to take over, right? So once it closes below it right there, you could take your entry right there on the closure and put your stops above those highs right there, right? You put it at like a good little 9 pip stop, give it a little bit of breathing room. And you know, I don't care to target more than a 1 to 2. Hell, these days I'd be wanting to target a 1 to 1, just because you never know what price is going to do. And at the same time, my win rate, I feel like, is pretty high at this point, pretty accurate at reading these markets and reading price, just building this intuition. Hell, every video that I do for y'all, I'm building more intuition of my own. And so like with this setup right here, this is a daily setup, right? Remember, we went from the daily time frame, we had that market structure shift on the 1 hour and all of that, bro. This was the opportunity right there. We caught that leg, right? So that leg was caught right there. Boom. But then it went up higher, right? It didn't just fall away, because whenever the daily market structure shifts bearish, then the weekly and monthly, they should become bearish as well, and they should start making lower prices. But in this situation, after a market structure shift, if price goes higher against you, what is this? This is just a higher time frame turtle soup. which is going to be like a weekly turtle soup area, right? So right here, you could see, boom, it becomes a weekly turtle soup, right? Because we have daily was confirmed bearish, and if it goes up and it turtle soups that, it's bearish. You're looking for sell still. I personally still hold to that bearish idea unless price breaks above this, starts creating some bullish PDAs, and then respecting those bullish PDAs higher. Then I'd be like, no, it's not really bearish because bullish PDAs are being created and respected, right? But in this situation, I am still going to hold the bearish idea right here, not just because it's hindsight, but because that's how I actually approach these markets, right? So since it's a weekly turtle soup, I know we dropped from a monthly to a daily. This is technically a monthly run on liquidity, external range liquidity, which we got the daily market structure shift from. Now this has become a weekly turtle soup. And whenever we go from a weekly, we go to a 4 hour. So we're going to look for a 4 hour market structure shift bearish from that point, right? And at that point right here, you got it ran it right here, okay? So once it ran that point, I'm going to look to the left. Where is my 3 candle wick swing low? My market structure shift point is right down here. And we're going to follow to see if it creates new ones. Creates a new one right here. Creates a new one right here. And what are we waiting for? We're just waiting for candles to close below it, specifically a daily candle to close and confirm it. And then we create this one right here. It goes higher, it creates this new one right here. Notice how no market structure shift happens until price is truly ready to freaking melt. You know what I mean? It doesn't happen until it's ready to melt. See, it respects all of these 3 candle wick swing lows. It never closes below it until boom. Now it closes below it, but we need a daily candle to close. And specifically, we stick to the charts systematic way of the daily candle. We're not looking at the midnight, the 11:59 p.m. Eastern Standard Time close. We are looking at the daily candle close according to the charts, which is 16:59 Eastern Standard Time, right? The new daily candle opens on the charts at 17 p.m. EST, okay? So, with that being said, we are looking for right here. So, this is where the daily candle closes, is right here, right? So, the daily candle closes here, okay? So, right here, I've talked about it before. If I'm comfortable with risking 1%, I'll dollar cost average in, risk half that percent initially, and I'm going to put my stop loss above the weekly candle that just closed. So my sell position would be right here. My stop loss would be above the weekly candle that just closed, which would be up here. Boom. And I would target that 1 to 2R, right? Boom. Now, obviously, that position hit. Now, again, whenever that daily candle closed and confirmed that market structure shift, now the new daily candle opens. And whenever it opens, goes high, power of 3. It opens and goes high, and it's going to retrace because it's a daily time frame. We use a 1 hour PD array right here, right? So I'm going to go back to that area again. And what does it open? We want to look at the midnight open, right? So the midnight open happens right here. Okay. Midnight open is right here and it's already high. It's already opened high. And what is it opened high into? Boom. 1 hour PD array, dude. It's crazy. It's so it happens every time, bro. Like today, Junior, it makes me stutter my ass off, dude. It's so good, bro. It goes high and it's already in this fair value gap. So whenever midnight comes around, you're like, well, it's already in this area. It's already open and it's already went high. It's also, what does it do right here? It turtle soups. Boom, it turtle soups this 1 hour high, bro. Once it does that, I don't recommend going any lower than these time frames I just went on. But because it's a 1 hour turtle soup, you could go to the 5 minute, wait for a 15-minute closure over that market structure shift point, and you could look for opportunity there, bro. And you could take that sell opportunity. That's just scaling in, dude. Scaling into these lower time frames and taking advantage, bro. But like right here, as soon as it like turtle soups, bro, like you could take your position right here. As soon as midnight opens and it goes up right here, you can take your position right there. Or as soon as it turtle soups, but you don't know what's going to happen. You don't know that. So let's just say we took our position here. Now, because it's a fair value gap, I always put my stop loss above the one candle of the fair value gap pattern because it consists of three candles, one, two, three. So I'm going to put my stop loss above this wick. If the two candle is higher than this wick, I'll put it above the two candle. But this is a 22 pip stop. Again, 1 and 2 are beautiful setup right here. This is how you read price. This is how you find your daily bias. And this is how you find entries, bro. You start on the monthly. Once you get the monthly down, you look for that daily market structure shift. And once that market structure shift is confirmed and it starts moving away and respecting and it starts creating new PDAs, disrespecting old ones, it's giving you idea of where daily bias is headed. And once you have your daily bias, you could start looking for open high low close or open low high close, power of three, accumulation, manipulation, distribution opportunities, bro. It's all the same, bro. It is all the same. And it is so beautiful. I'm like, bro, it just build your intuition, dude. Go back in these charts, the setups that I just went over in this video, go in your charts and right along with me, mark up your charts just the same that I did in in this video, in the other videos too, bro. And build your intuition. See what I'm seeing, see what I'm explaining, and understand it, bro. I'm telling you, ladies and gentlemen, you will find success when you can understand how to read price this way, okay? I hope you all liked the video. I hope you found some value. Comment if you have any questions, concerns, or comments about anything, bro. We have a Telegram channel where you could come and say what's up, talk to other like-minded hotshots. And I mean, if you're new here, subscribe for more, dude. Subscribe for future content. I'm gonna start switching up the content. I threw in a little bit of a motivational speech in the beginning. So I have like a daily routine where it's based on self improvement, mental health, like physical health, and just wealth. All in all, you know what I mean? Those are the three things that you should really focus on in your life is, family, health, wealth, and if you're religious, religion. You know what I mean? It's, I don't judge, but those are like the main things you should really focus on. And whenever you start structuring your life around those things, you start seeing a lot more progress. And so I want to motivate and inspire you all to do more. So I'm going to start turning my videos into more of a like vlog style self improvement, but I'm still going to keep these same style videos where you're going to get these breakdowns of these charts where I'm going to approach price, break it down, and help you build your intuition as well. So I am very positive that you will find a lot of value in those videos, and I'm excited for what's to come in those videos. So again, if you're new here, subscribe for those, and we'll see you in the next video. Bye.